Have you ever wondered how people make money just by buying stocks? Or whether you could do the same? But what even is the stock market and how do you get started in 2025 without losing your money? Well, if you need answer to all these questions, you are just in the right place. Because in today's video, we will be talking about everything a beginner needs to understand before investing in the stock market. From how it works to where to get started, mistakes to avoid, everything will be explained very shortly. So without further ado, let's get right into it. So let's start with the basics. The stock market is like a huge online store, but instead of buying clothes or gadgets, you buy pieces of companies. Those little pieces are called shares or stocks. And when you buy a stock, you're buying a small part of that company. If the company does well, becomes more valuable, or starts earning more profits, your share becomes more valuable. And if the company keeps doing well, they might even share parts of their profits with you, which is called a dividend. Here's the truth. If you leave your money into a savings account, it grows, but very slowly, like snail level slow. But if you invest smartly into the stock market, your money can grow even faster over time. Let's say you invest $1,000 and it grows by 10% a year. So that's just $100 in over a year. Imagine that compounding over 10 or 20 years. That's how people build wealth, even if they start small. First, you'll need a brokerage account where you buy and sell stocks. In 2025, platforms like Webull, Fidelity, Robinhood, etc. lets you open your account right from your phone. Most of these apps are beginner-friendly and free to use, so you need to choose the one that's easy to understand and lets you buy fractional shares so that you don't need hundreds of dollars to invest in big companies. The next step is to connect your bank and transfer some money. Even $20 to $50 is enough to get started. Some apps offer instant deposits, but you can also set up automatic monthly transfers so that you can invest regularly without even have to worry about it. Before buying a stock, learn what the company does. Are they profitable? Are they growing? Are they making stable money? Don't just follow the hype, look for real value. You can find the basic information in your app or on other websites like Yahoo Finance, etc. If you're new, it's smart to begin with ETFs, which are bundles of many stocks and makes your investment even more stable. A great example is the S&P 500 ETF, which includes 500 top US companies. Or you can also use blue chip stocks like Microsoft, Apple, Coca-Cola, ginormous and trusted companies with steady performance, great performance, and profitable results. Once you've invested, keep an eye on your portfolio, but don't panic over daily changes. You can use apps to track performance and continue learning as you go. Remember one thing, the more you understand, the smarter your investing becomes. ETFs are perfect for beginners because they spread your money across many companies. Think of them as a bundle of stocks in one package. For example, if you invest in an S&P 500 ETF, you're investing in 500 of the largest US companies at once, like Apple, Google, and Amazon, without buying each stock separately. Some popular ones are VOO, SPY, VDI, which covers the whole US market. Blue chip stocks are big, well-established companies with a history of success. They may not grow fast, but they are reliable and often pay dividends. Some examples include Apple, Microsoft, Coca-Cola, Johnson & Johnson, and many more. These are companies that people use every day, and they've survived economic ups and downs as well. That's what makes them beginner friendly. Dividend paying companies give you regular payouts just for owning their stock. These are great if you want a steady income stream while your investment also grows. Some ETFs also pay dividends monthly or quarterly, which is a nice bonus for beginners. You'll hear a lot of hype, buy this penny stock now, or this coin will be 100 times more valuable. Ignore it. Real investing is slow, steady, and strategic. Don't put all of your money into one single stock. If it fails, you lose big. Spread your money across different sectors like tech, healthcare, energy, etc. etc. Stock down 10%? Don't panic sell. Stock up 30%? Don't get greedy and buy more without reason. Learn to stay calm and stick to your plan. Want a quick answer? The longer the better. In short-term, market can be totally unpredictable. But over 10, 20 or 30 years, history shows that it tends to go up. So if you're investing for retirement or saving for your kids' education or trying to build long-term wealth, staying invested is the key. Now let's quickly wrap up today's video. Investing in the stock market in 2025 has become easier than ever, but only if you do it the smart way. You don't need to be a financial expert or a millionaire to start. You just need to start today. So what are you waiting for? Comment down below what your first investment will be and subscribe for more beginner-friendly finance videos. Until next time, take care.